Hey everyone, roughly 1 month ago I updated my Tesla stock price prediction for 2024, and since then so much has changed that's required another update to my Tesla stock price prediction for 2024. So that's what I'll do here in this video. I'll incorporate all of the new information that's come out since my last video predicting where Tesla stock price could be, and I'll update and I'll give you my new price prediction for where Tesla stock could be. Of course, remember I told investors not to buy Tesla stock for 2024. I forecasted the EV industry overall would be in significant trouble this year, and that's turned out to be right. The EV industry overall is struggling, Tesla included. So let's update this prediction and let me share with you where I formerly thought Tesla stock price would be, and I'll update and let you know where I now think it will be.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so 1 month ago in this video, when I updated my Tesla stock price prediction, I thought the price could be between $150 per share and $250 per share. And I told investors that I did not have Tesla stock rated as a buy because of the elevated risks and the poor industry dynamics Tesla operates in. So I'm going to update this prediction, obviously, because the Tesla stock price has already fallen down to $150 per share. So I need to update that. Plus, we've had new earnings per share forecast come out from Wall Street analysts who downgraded Tesla's earnings expectations for both this year and next year. So like I mentioned, Tesla stock price already hitting the bottom end of that target, $150 per share, down from around $250 per share to start the year. Now, I've kept Tesla stock rated as a hold or not buy, even through all this downturn. I haven't felt that this is a buying opportunity. I felt like the stock price decrease was justified given all of the poor results coming out from the EV industry and Tesla's reported decrease in year-over-year delivery numbers and all of the price cutting that's happening in the industry. Rising competition, supply is increasing, competitors are cutting prices, all of which I want to stay far away from, including this recent price dip. Now, I also want to look at Tesla's forward price to earnings ratio. Right now is trading at a forward PE of 38.71. I'm going to use this for my price prediction. Now, I highlighted Wall Street analysts have downgraded Tesla's earnings estimates for 2024. They previously thought 90 days ago that Tesla is going to deliver $3.74 in earnings per share. They decreased that to $2.86 before increasing it to $2.99, and then regretting that increase and dropping it again to $2.53 7 days ago, and dropping it again to $2.51 from the previous week. Similar story for next year, where analysts first thought that Tesla would deliver $4.90 in earnings per share. Then they dropped it to $3.89. Then they dropped it to $3.44 before dropping it again in the last week to $3.41. So Wall Street analysts are tripping over themselves to downgrade Tesla stock seemingly as quickly as they possibly can, while also maintaining that orderly decrease. They don't want to suddenly slash those earnings per share estimates because they previously had Tesla stock rated as a buy, and they don't want to change that recommendation so suddenly. Today, Deutsche Bank came out and downgraded its expectation for Tesla stock, decreasing it one notch from its rating. So analysts on Wall Street are starting to realize Tesla's prospects are troubled as the industry dynamics are not working in its favor. It remains to be seen how long it'll take for Tesla to develop, or if they'll ever develop, driverless cars. Elon Musk has teased an announcement coming August 8th, and investors are hoping, shareholders are praying that something good comes out of that announcement, and it's not just another show with little substance coming out of Tesla. So it remains to be seen what will happen in that announcement. Now, updating that prediction. So if Tesla does indeed deliver $3.41 in earnings per share for 2025, and the forward PE multiple stays where it is at 38.74, the stock price will continue falling down to $132 per share. However, I don't think the forward price to earnings ratio is going to stay low. Even though I think it should, I don't think investors should pay this high a price for Tesla stock. Investors, I feel, are going to continue piling into Tesla stock, and they're going to raise the valuation, the forward price to earnings valuation, because of some aspect of something that might happen in the future. There's strong faith in Tesla stock. Tesla stock investors are hesitant to let go of Tesla. They think it's going to rise. They have strong predictions about what the company can deliver with the robo-taxi and robotics and all of these other capabilities that they have yet to prove. Investors are willing to give Tesla the benefit of the doubt. And so I think the forward PE multiple will rise. So if it rises to 45, then the stock price could end the year at $153 per share. If it rises to 60, then the price could end up at $204 per share. However, if Tesla's prospects continue on the direction that they're going, and Tesla doesn't provide any substance on robotaxi, then the stock price might actually start to trade like other tech companies or other car companies. Remember, Tesla stock is not only more expensive than every other car company, it's also more expensive than most of the hottest tech companies, including Nvidia, Apple, Microsoft, Meta platforms. Let me share that with you here just as an example. Microsoft, Apple, Meta platforms. Let me check all these boxes, and you can see when you're measuring with the forward price to earnings ratio, Tesla stock is more expensive than Microsoft at a forward PE of 30, then Nvidia at a forward PE of 27, then Apple at a forward PE of 23, and Meta platforms at a forward PE of 21. So Tesla is not just more expensive than car companies, it's more expensive than tech companies. Even if you say, okay, Tesla is 100% a tech company, which it's not, it still generates the vast majority of its revenue, cash flow, and profit from sales of vehicles. So some point in the future that might change, and a larger percentage might come from services and technology. That's not the case just yet. But even if you give it a 100% tech valuation and you compare it to tech companies, it's still more expensive than its large cap tech peers. So any way you split it, Tesla stock still expensive, even given its tech nature. Even if you assign it a tech company valuation, still expensive. So if the valuation were to come down and trade more like other tech peers and closer to other car companies, then the stock price could fall to $109 per share. So my base case now, my updated forecast for Tesla stock, remember I had it between 150 and 250, and the wider than usual range is because of how volatile Tesla stock is. I wouldn't feel like it would be prudent to assign a narrower range to a stock that's more volatile than most companies. So to update this prediction from 150 to 250, I'm rating it down lower to between 125 and 165. Between 125 and 165, given the current forecasts for earnings per share, given the current prospects for Tesla stock and the rest of 2024 being, in Tesla's own words, a transition year between growth. This is the valuation I feel the stock could hit by the end of the year. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.